Hi friends, welcome back to my channel Modern Quantity Surveyor Key Skills to Have. So we will continue with the competencies that you need to know. The fifth competency is accounting principles and procedures. Here we will look into the basics of accounting and finance, some of the terms related to accounting, what are the types of accounting, what's the mechanics and the process of accounting. So what is accounting? Accounting refers to a set of methods and concepts that analyzes and reports financial information for decision making. Companies are expected to report their earnings regularly. Investors consider these reports when trying to discern the financial health of a company. So to understand the accounting process, you need to learn about the fundamentals of accounting. Let's talk about bookkeeping and accounting. Bookkeeping is the process of recording the financial activities of a business, whereas accounting is the process of classifying, summarizing, and understanding the effects of those business transactions. Assets and liabilities. Assets are things that company owns that has monetary value, whereas liabilities are anything that a company owes to someone or some other institution. Assets may be tangible or non-tangible, whereas liabilities can be short-term, current or long-term liabilities such as loans. So there are three major types of accounting: financial accounting for external use, managerial accounting for internal use, and tax accounting. Financial accounting is the kind of accounting targeted towards a broad or external audience. It delivers information about the company so that people can evaluate its financial health and make decisions, such as shareholders. It's a type of historical accounting prepared using generally accepted accounting principles. Managerial accounting is the kind of accounting targeted towards the internal audience of the company for decision making. Managerial accounting makes short-term strategic and other long-term business choices using various financial and non-financial information. Managerial accounting does not require standardized accounting principles like GAAP. Instead, it allows more customized information specific to the needs of the management. Lastly, tax accounting. This is the kind of accounting involved with calculating a company's tax liabilities and planning the taxes properly. So, accountants. Now, the accountants, they play a significant role in the company and provide information to the owners, managers, members, external and internal stakeholders and prepare taxes. They record transactions and other financial records and analyze them to assist in the company's decision-making process, such as making cash flow and balance sheet statement. Accountants also let the company know if it has been facing profits or losses by preparing profit and loss accounts. So there are some chartered accountancy professional bodies in the UK and Ireland, such as the Association of Chartered Certified Accountants and Chartered Accounts Ireland, and so on. The accounting standards. So the International Financial Reporting Standards, they set common rules so that financial statements can be consistent, transparent, and comparable around the world. IFRSs are issued by International Accounting Standards Board. In UK, generally accepted accounting principles, they are a body of accounting standards published by the UK's Financial Reporting Council or FRC. So, accounting mechanics. Now, accounting has some mechanics to establish how accounting process is carried out. Some of them are the journal, debit and credit, ledger, and trial balance. The journal is the first step in the accounting process. It's a chronological record of all financial transactions as they occur. Each entry in the journal is called a journal entry and it includes the date, accounts affected, amounts to be debited or credited, and a brief description of the transaction. Debit and credit, these are the fundamental principles that guide the recording of transactions. If an entry is recorded on the left side, it is called account debited, and if the entry is recorded on the right side, it is called account credited. Debits and credits must always balance each other, ensuring the accounting equation assets equals liabilities plus equity remains in balance. Ledger. The ledger is a collection of all accounts used by a company. After transactions are recorded in the journal, they are posted to the respective amounts in the ledger. The ledgers divide this simple information by account and keep a running balance of each of these accounts, whereas the journal lists all types of transactions chronologically. Trial balance. The trial balance is a report that lists all ledger accounts and their balances at a specific point in time. The purpose of the trial balance is to ensure that the total debits equals the total credits. If they do, the books are considered balanced, though this doesn't necessarily mean there are no errors. Accounting system. There are two types of accounting systems, single entry and double entry. Single entry system is not used by traders except for sole proprietors. Double entry system is the universally used by most businesses regularly and is scientifically based. This system understands that every transaction has two sides and records both sides of the transaction. Every transaction entails an equal exchange of equal values and benefits. The accounting process shows the step-by-step process flow of an accounting transaction. It starts with identifying the transaction and shows the steps it will go through until management can use it for decision making. So let's have a look at the accounting process steps. The first step is identification of transaction source, for example receipt. Second step, preparation of documents as soon as possible to reduce error. Step 3, recording of transaction in journal. Step 4, posting to ledger. Step 5, preparation of trial balance at least once a year. Step 6, passing adjusting entries to accounts. Step 7, preparation of final accounts is the last step in the accounting process. It's the most interesting for the QS as it involves profit and loss accounts, cash flow statements, balance sheets and fund flow statements, and provides overview of a company's financial performance. So lastly friends, accounting is the language of business is a famous quote by Warren Buffett. I hope you enjoyed. Please learn at least one competency a week. Thank you and